The COB is brought to you by Pepperstone, trusted by traders in over 160 countries. From Barangaroo Studios, here's what you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. This Thursday, in a day when we started the day on quite a shocker of a note. I think at one point we were down about 1.6% on the ASX 200. Just checking in on where the CBO 200 is finishing out the session. Last I checked, it was a drop of about 0.4%. There we are, down by 0.5%. The ASX 200, meanwhile, is finishing the session lower by 0.6%, 7,737 points as we start to see a little bit more momentum coming back into this market. The interest rate sensitive sector though very much under pressure today. A lot of those REITs heavily hit hard, and of course a lot of the momentum really was this concern that we could see an August rate rise on the cards after inflation hit 4%. That kind of brings us to the three themes of the day: this rates reaction, the repricing. Remember when we thought we might get a couple of rate cuts this year? Well, NAB today pushed out their forecast for a cut from November to May. We've already seen ANZ push theirs from November to February. And you're definitely seeing a big repricing in the bond market as well, with yields jumping as we start to see the momentum of when we might see another move from the RBA. The NAB economics team now, as I said, saying a first rate cut unlikely until May 2025. They then see a steady profile of one cut per quarter back to 3.1%, but they don't think we'll reach that point until mid-2026. So certainly a lot of momentum coming through in the bond space today. We've also been watching very closely what's been happening with uranium, and uranium under a little, so a little bit of momentum coming through in some of those players as well. Let's have a look at some of the sectors of the day, starting with those REITs that I mentioned, of course, which are under pressure. Charter Hall down 4.4%, Centre, Goodman Group, Dexus and Mirvac. When it came to the industrials, a bit of a mixed group there. Seven Group up by 0.2%. Let's get to the banks. ANZ, NAB, CommBank and Westpac all under pressure. Macquarie was actually higher. There was a little bit of corporate news around today. Qatar Airways set to take a 20% stake in Virgin Australia. This comes as Virgin's owner Bain Capital looks to float the company on the ASX. But of course, Qatar would need approval from the FIRB. We also had Southern Cross Media deciding against pursuing a proposal by ACM to acquire a portfolio of their key print and digital news publications. The founder and chairman of Austal, John Rothwell, to retire after 37 years at the helm, and Mosaic Brands appointing David Clark as its new chief financial officer following the resignation of Luca Softer. Let's get straight to our guest, Mathan Somasundam from Deep Data Analytics. How do you kind of describe what happened today, Mathan, when we saw that big drop on the open, but we've kind of rallied a bit into the close?
Yeah, I'm not surprised. We're a couple of days away from the financial year end, quarter end. It's critical. Every fund manager is going to be putting up whatever they're holding onto the annual report. So you want to be making sure you got good ones on the annual report. So there's a bit of movement going around. You've probably seen in the last week, there's a lot of substantial changes from fund managers getting out of some of their underperformers. You've got the tax loss selling. So there's a fair bit playing out. And the usual window dressing happens on the second last day. So today's the second last day. So if you want to get your stocks looking a bit better, today's the day to pad it up, so as to put. So those are the usual games that are being played out. So I think the macro thematic is still what it is. I mean, this morning's pullback, I think it's logical. I mean, you were saying it before about the rate cuts. I mean, in the US, 6 months ago, we had 6 to 7 rate cuts, and now people are hoping for one. So things have changed dramatically. And in Australia, I think it was always logical. What we did to keep the asset bubbles going, especially in the property market, is to ramp up immigration. And immigration, by default, was going to come back to you as high inflation, and that's what we're seeing. So there's no real surprise there. I find it amusing that most bank economists usually just follow the RBA. you kind of know what they're going to do after the RBA tells you. So everyone had the rate cuts now. pretty much nobody's having rate cuts. So it's not really a surprise. We've been saying that the rate cuts were always a tricky one, and they were not going to go before the Fed. So it was always a waiting game. So I don't think that's changed at all. If the Fed cuts, trust me, RBA is going to start talking about rate cuts straight away. So the numbers are not really what I'm looking at.
All right, well, talking about the RBA and, of course, where we might next see that move, it really comes through into that cost of living crisis as well. And I just wanted to get your thoughts on what we heard from retailer Baby Bunting today. That was our stock of the day as well, because on the one hand, you could say it is the fact that sales are declining, cost of living pressures, or is this a broader macro trend of people not having as many babies?
That is actually a very common trend, and that is a global trend, and that's not just in the last year or so. This has been a long-term trend. So I guess we kind of hide the reality that cost of living has been going up gradually for a long time, and that's kind of translated to people having less kids because, I've got a few kids. It's expensive. I always tell my kids, you guys are the depreciating asset that cost a lot and suck my liquidity, but actually never go up in value because I can't sell you. So, it's one of those things. Kids are expensive. And you can see why China 3 years ago decided, I need to bring down cost of living or people are not going to have kids. And they deflated their property bubble. They reset their education system. They basically reformed their tech sector to help the average consumers have lower cost of living. Now, it sounded stupid, but now you look back at what's happening around the world, we are all trying to defend asset bubbles, which means we keep high cost of living. And it just means that people are having less and less kids. And I don't think that's going to change anytime soon. So unless we changed our view and say, okay, we're not going to defend asset bubbles, we are actually going to defend standard of living and try and keep low cost of living, this cycle will continue to play out.
Yeah, and I guess it just plays through into all of these things that the RBA is faced with. We talked about the move in bonds today on the rate repricing. Deputy Governor Andrew Hauser delivering a speech tonight. Do you think this is kind of the new RBA too, where they're being more media facing?
It always worries me when you see, and I'll go back to the time I had this lesson through Bellamy's when we had. Bellamy's never talked to, this was a baby milk powder business out of Tasmania, never talked to the media, nothing. And the stock price ran, I think it was about 10 or 15 times. It was doing great. And then they did a full spread newspaper, and I knew straight away, oh my God, something's wrong. That's just the usual trend. Central banks who are in control and not worried about what's happening and their policies are biting exactly how they're planned, they're not going to go on the media. When people start to do too much media, that means things are wrong. When central banks do too much media, that means the policy is not working. They need to get out there and tell people, no, what you think is not what is really happening, and we want you to go the other way. And that's the problem. Central banks have kept liquidity too high for too long. So it's really hard for them to get the reaction that they want without throwing the economy down. So it's tough. I think they're stuck between a rock and a hard place.
Yeah, indeed. All right. Well, we've talked about the fact we've got window dressing for the next couple of days or so, but what's sort of the next catalyst for markets, Methan? We're getting GDP from the US tonight.
Yeah, and the core PCE as well. PCEs to a certain extent will be interesting for inflation measure because that's the Fed's preferred one. Now, I guess we've seen PCE, normal inflation, as well as PPI come in about 1 decimal place below expectations. So I suspect PCE is going to follow the same trend because the main driver was the energy prices, which have since bounced. So I suspect that's not going to be a big mover. The GDP is slowing, and I don't think that's going to shock anyone. And I think that'll play out as well. I think the key thematic for me is you're going into a financial year end. As I said before, there's a lot of padding going on in the market. There's a lot of fund managers getting out of beaten up stocks. There's a lot of tax loss selling. As a retail investor, you don't have that problem. So, you don't need a big liquidity event. These are the times when you take advantage of other people's problems to make better returns. So if you like a small cap, micro cap, and you've liked it for a while and the market is throwing it out, now is probably a good time to look at it because today and tomorrow, you're going to get a pretty good deal. And generally, trends suggest that in July, some of those beaten up micro caps and small caps tend to bounce, and they bounced quite a bit.
All right. Thank you. As always, have a good Thursday. We'll see you next time. Methan Somasandaram from Deep Data Analytics. We touched on Baby Bunting there, which was the stock of the day on the call. Grady Wolf from Bell Direct had a hold. Howard Coleman had a sell.
I'd put a hold rating on it at the moment just because it's going to face some headwinds right now, because obviously higher for longer is the consensus, interest rates potentially going up again, so with inflation high. So again, consumer discretionary spend is coming down. So I don't know, the Bugaboo exclusivity is a massive win for them.
How would you be enthused about a retailer that sells products that everybody sounds like they spend a lot of money on and can only manage to make $2 to $4 million in a year? That's appalling from that many stores.
See,
All right, the market has closed. Let's get a look at the leaders and the laggards of the day. Kicking it off with the leaders, Star Entertainment up by about 4.8%. Arcadium Lithium, ResMed, West African Resources and Strike Energy all also had a good day on a day when, of course, the market did come under pressure. To the losers today, Judo Bank, Mirvac, GPT, Dexus and Region. And looking at the small end of town as well, Baby Bunting, we discussed there at length. It was up 17%. And on the downside in the small end of town were these stocks: Melbana Energy, Wildcat Resources, Red Hawk Mining among them. Well, of course, tonight we talked about this. The US GDP, I think, will be the key one, but we do have RBA Deputy Governor Andrew Hauser speaking in Sydney. The Bank of England Governor will speak in London. Unemployment claims and US home sales as well. And flipping it ahead to tomorrow, we've got private sector credit for April. There'll be a bank holiday in New Zealand. Japan has its Tokyo core CPI. President Biden speaking at the first presidential debate, and the French preliminary CPI year on year, of course, much later in the day. It has been a down day, but as Nathan said, no surprise, we started to see a bit of a buying in towards the end, and we can probably expect that tomorrow. Year end and a financial year coming to us. We started the day with a drop of 1.6%. We finished down by about 0.5%, and then just having a quick look at where the ASX 200 was, finishing the day lower by 1/3%. We talked about Judo and GPT being the biggest losers. Over the last 5 days, the index virtually unchanged, currently about 2% below its 52-week high. That does it for the COB. We'll be back bright and early from 9:40 tomorrow. Please do join us then. Enjoy your evening.
The COB is brought to you by Pepperstone, trusted by traders in over 160 countries.
Gil.
Oh, hey, Ken.
here we go.
You still trading?
Pepperstone. Trusted in over 160 countries. You?
Well, I'm still with...
I don't think anyone trusts them.
No, I'm fine with it. Just like I'm fine with my trusty coach. 1980s John McEnroe.
Pathetic! Horrible!
1980s, huh? So, really temperamental?
Keeps me on my toes.
Awful!
It's a bit intense.
Be better!
Still fine with it.
Use your racket!
He's just staring at us.
Yeah, sometimes he yells and then sometimes he just stares.
Is he aiming for your face, Gil?
He's fine with it!
Yeah, he's definitely trying to hit you.
Fine with it.
Don't be fine with it. Switch to Pepperstone, trusted by traders in over 160 countries.
Come on, you cannot be serious!
Don't do that.
Ow.